Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. In today's video, I'm going to be asking ChatGPT some financial questions. Some will be serious, some will be kind of like on the funnier side. And we're going to see what it spits back out at us. If you're not familiar with ChatGPT, it's basically this platform right here. It is created by OpenAI. It is basically an artificial intelligence bot that kind of sources or scours the internet and uses algorithms to produce answers. If you're not familiar with ChatGPT, everyone's been talking about it for the past 2-3 months now. I highly suggest you take a look at it because it has a lot of capabilities just outside of answering questions. So I'm going to copy and paste one of these questions that me and my research analyst came up with, and then I'll read it for you, and then we'll see what ChatGPT says. So I'm going to zoom in. So you can see it start typing right there in the bottom. So my question is, hi GPT, I'm interested in purchasing a $500,000 home within the next 5 years. Here are some things about me. I live in a single income household and earn $100,000 a year before taxes. I have the following debt: $30,000 in student loan debt at a 5% interest rate, $2,500 in credit card debt at a 20% annual percentage rate. And then some of my recurring monthly expenses include car payments and insurance, $400, rent, $3,000, retirement contributions, 5% of my monthly income with a 5% employer match. My savings account balance is $10,000. My checking account is $2,500. My brokerage account balance is $5,000 invested in various mutual funds and ETFs. So you can see right here, this is literally an auto-populated answer. So it's a little bit longer, but I think it's important for you guys to understand this. The reason I'm focusing on this is because A, it's fun. I was thinking about doing a video about some current events that we're going to talk about in terms of mortgage rates and better credit scores and worse credit scores and things like that. But it's important that you see this because AI is going to be ubiquitous here over the next few years, and you might as well get used to it, whether you like that or not. It's the truth. I'm more of the, hey, I'd rather sit around a campfire and be, a lizard brain Neanderthal than go into the put the VR headset on your face. But I think it's important to understand what answers this comes back with. So you can see here it says, based on the information you've provided, it's possible to develop a plan to help you purchase a $500,000 home within the next 5 years. Firstly, it's important to pay off your credit card debt as soon as possible. Credit card debt typically carries high interest rates, and it can be a significant burden on your finances. You can start by prioritizing your credit card payments and cutting back on unnecessary expenses to free up extra cash flow each month. Okay, so let's break that down. I think it's good. I think, that's a good place to start because it is starting with actually the highest interest rate debt possible. If you remember, this scenario that we gave it was basically $2,500 in credit card debt at 20% APR and $30,000 in student loan debt at 5% interest. So they say next you may want to consider refinancing your student loan debt to a lower interest rate. This can help you save some money on interest over time and reduce your monthly payments. You could also explore the option of paying off your student loans early if possible, which would free up additional cash flow for saving and investing. Okay, so far so good. This wouldn't be outside of the realm of what a human being would recommend so far, especially if you can get that student loan rate lower. And obviously, if you're paying off the 5% student loans, you're then obviously just freeing up that payment for other stuff, which would be the credit card in this case, even though mathematically you want to pay off the higher interest rate debt first because it's a guaranteed rate of return of whatever the interest rate is on that debt, tax-free as well. So in terms of saving for a down payment on your future home, you can start by setting up a specific savings plan. Consider setting a goal of saving $100,000 over the next 5 years, which would represent a 20% down payment on a $500,000 home. To reach this goal, you would need to save around $1,667 per month. Okay, so, it's pretty basic. That just makes sense. They're basically just taking 20% of whatever the home cost is, which we identified or told it was $500,000. They said, hey, if you want to put down 20%, you're going to have to save $100,000. You can do that divided by 60 months, and you're going to get this per month. So you can start by allocating a portion of your monthly income towards savings each month. Additionally, consider cutting back on discretionary expenses such as dining out, entertainment, or vacations to free up additional funds for savings. Okay, this is all common sense. ChatGPT is going to put Dave Ramsey out of business and other finance YouTubers, me included. So you can no longer get away with building a multi-$100 million empire by telling people Spend less than you make. Really? I didn't know that. So yeah, this is all pretty basic. You may also want to consider contributing any bonuses or raises you receive towards your savings goal. While saving for a down payment, it's also important to maintain an emergency fund of 3 to 6 months. Is this me? Am I talking to myself, you guys? Maintain good credit scores, yada, yada, yada. Okay, so this is all pretty basic, you guys. This is no different than what the most basic personal financial advice would be. And sometimes that is the best thing that you can give, the best advice that you can give or get. So here's a more technical one. Let's move on to the next question here. So not bad. If I had to rate that, I'd probably rate that a 3.5 out of 5. You know, solid, nothing earth-shattering, you know, not bad, not good. But remember, this is just an algorithm, you guys. So the next one I'm going to send it is, there are 2 stocks I want to invest in. One trades at 0.5x book value, 300% debt to equity, and 50% return on capital. The other trades at 1.2 times book value, has 50% debt to equity, and 25% ROC, return on capital. If you had to pick one of these stocks, which one would you pick? As an AI language model, I cannot provide specific investment advice. They already programmed it to say, this is not financial advice. I love it, dude. ChatGPT is a YouTuber. It's a stock market finance YouTuber. It doesn't even know it yet. And it's important to note that investing always carries risk. That being said, click on this affiliate link down below. Hey, all joking aside, WeBull, one of my affiliates, actually is giving away 12 stocks up to $30,600 at the time of this recording. So all joking aside, if you're interested in that, that is my affiliate link. Click on it. It's in the description below. When you deposit money, you'll get that. That being said, I can help you. Click on the affiliate link down below. So it says I can help you about the 2 stocks you provided, how you might evaluate them based on different investment criteria. The first stock appears to have a low valuation relative to its book value, but a high debt to equity ratio. The high return on capital suggests that the company may be able to effectively utilize its capital to generate profits. However, the high debt level could be a concern as it increases the company's financial risk. Okay, so I mean, that all makes sense. That's all textbook stuff. I think what ChatGPT is good at is it's good at pulling all this information from all across the internet and writing it in a way where it almost turns it into like reading out of a textbook, right? It makes a lot of sense. However, the high debt level could be a concern. Okay, that makes sense. The second stock has a higher valuation relative to its book value, but a lower debt to equity ratio. The lower return on capital suggests that the company may not be as effective at utilizing its capital to generate profits, but the lower debt level could make it less financially risky. Okay, so again, common sense. It's almost like, hey, you know, you have less debt, you know, go start a business. Or you have no debt, now it's time to be a little bit more risky. Hey, you have a lot of debt, let's try and get this off our books and be a little bit less or more risk averse or a little bit less risky. So this is pretty, I don't know, pretty obvious stuff. So when evaluating these stocks, you may want to consider other factors such as the company's industry, growth potential, competitive position, and management quality. It's also important to consider your own risk tolerance, investment goals, time horizon. Yeah, this is all just, you know, common sense stuff, you guys. This is stuff that I would tell someone who's brand new to investing. So it's doing a good job. But it's very vague. It doesn't. It's like a YouTuber, you know. It's like, hey, buy my course so you can learn everything. But it's very vague in the videos. It's saying like, ultimately, the decision to invest in either of these stocks should be based on a thorough analysis of the company's financial statements or other relevant information. Consult with the financial advisor. Like, yeah, duh. Like, we know all this. So although it gives you like a good primer, that was like a 2.5 out of 5, 3 out of 5. If I didn't know anything about stocks and I just copied and pasted that question into ChatGPT, I guess that answer would be sufficient. But, you know, for the deep layers of peeling back the layers of the onion, I didn't really learn anything there. So let's move on to this one. This one's getting kind of interesting. Let's do this one. What is the best method to outperforming the stock market? Okay, so let's see what this guy comes up with, or gal, or what would you describe AI as? Thing, it. As an AI model, I cannot provide specific investment advice. Okay, good. I think it's pulling all that from like the stock market YouTubers. It's just like generating that in its auto response. This is not financial advice. So one approach to outperforming the stock market is to invest in low-cost index funds or ETFs. Let's go, ChatGPT. such as the S&P 500. These passive investments are designed to match the market returns rather than trying to beat it. Okay. I mean, you're just following a benchmark at this point, but I mean, that's still excellent advice for a robot or an algorithm. Another approach is to invest in individual stocks that have strong fundamentals, such as a competitive advantage, so a moat, strong moat, strong management team, and a track record of consistent growth. This approach is known as value investing. Oh my God, this thing's incredible. So my journey before I was a index fund and ETF investor, I was a value investor. That's how any normal investor starts off as, and then you graduate to index fund investing, and then you can become an activist investor, you can become private equity, you can become a lot of different things, a swing trader, technical analysis, momentum trading, insider trading if you're Martha Stewart. All joking aside, there's a lot of different ways to invest, but these two are very good. I'm glad it mentioned index funds and ETFs, and I'm glad it mentioned value investing to start. It's not telling you, buy my penny stock and, go up 100x, right? Another strategy is momentum investing. Okay, there we go. I promise you, I did not see these results, but I'm typing these in live. So this is crazy. So it said index funds and ETFs, which is great, value investing, which is great, and then momentum investing, which is great. So this is, for those of you that don't know, this is involving buying stocks that have been performing well over a certain period and selling those that have been underperforming. This approach aims to capture trends in the market and take advantage of momentum, but it can be risky and may require active management. That's 100% true. Ultimately, the best method to outperform the stock market will depend on individual factors such as risk tolerance, investment goals, and time horizon. It's important to do your research, blah, blah, blah. Very good. I would say for, again, a robot, an algorithm, artificial intelligence, just pulling things from the internet, that's a 4 out of 5 in my opinion. Again, we're not looking for college level classes here. This is not, Dartmouth, Wharton, whatever. We're just typing these questions in and, seeing what it gives us as a result. So what is the bull case? Let's do this one. This one was by my research analyst. What is the bull case for FTX? FTX is a relatively new cryptocurrency exchange that has gained significant attention in the crypto community due to its innovative products and features. Here are some potential arguments for the bull case for FTX. Okay, come on. Wide range of trading products. Okay, that was true. High liquidity. Innovative features, including fractional stocks, pre-IPO contracts. Okay. Strong team and backing. Okay. Don't know about this one. Potential growth in the cryptocurrency industry. That could be true. It's important to note investing in any asset, including FTX. See, it's calling it an asset, which obviously is not right. You can tell that's AI right there. Yeah, this one is a 2 out of 5. Most of that stuff is obviously debunked at this point in time, at the time of this recording. Okay, so here's the last one. We're going to do this one. Let's see if it does give us any financial advice. What risky investments can I invest in to try and reach my goal of retiring early? This is a good question. As an AI language model, I can't provide financial advice, blah, 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 blah. So it's saying some examples of high-risk investments, crypto, penny stocks, leverage ETFs, venture capital. Okay, so it's just pulling stuff and making a list at this point, not that insightful. So I think overall, this is going to change a lot of industries. You can already see companies like Chegg, which is like a homework website, already getting destroyed because of ChatGPT. This is definitely going to be a paradigm shifter and a game changer, in my opinion. It's inevitable. Again, maybe I prefer to be the Neanderthal, lizard brain, caveman sitting around a fire, roasting meat and pounding my chest, as opposed to putting on the VR headset and living in the oasis. But artificial intelligence is inevitable. I think this will be the thing that takes us into the next paradigm of humanity, along with a sound money, such as Bitcoin, for example. But AI is definitely here and it's here to stay. I was flying back from vacation. I watched a segment on 60 Minutes talking about how they're programming all this stuff for so many different use cases. A lot of people get scared about, hey, is this going to replace jobs? Is this going to replace a lot of things? I'm sure it will, just as the combustion engine changed a lot of things as well. Internal combustion engine, excuse me. But, there's always going to be new jobs coming with different responsibilities because of innovation. So we'll see. I'm not for it. I'm not against it. But at the same time, I think if you're a copywriter, like the Hollywood Writers Guild, they're obviously striking because this has come up with unbelievable poems, unbelievable stories, pretty sound financial advice from the serious questions that I asked it. So it definitely will disrupt a lot of stuff. So we'll see what happens. Thank you so much for watching. Have a prosperous day. Okay. Does Marco Whiteboard Finance know what he's talking about? Marco Whiteboard Finance. I've never searched this before. I swear on everything. Marco Whiteboard Finance is a popular finance content creator on YouTube. Provides educational content in personal finance, investing, economics. While I cannot make a definitive statement on the accuracy of all his comments, he generally provides well-researched and informative explanations of financial concepts that can be helpful to his viewers. Wow. Okay. Thank you, ChatGPT. Thank you, tech overlord. It's important to note that no one source should be relied upon for all financial advice. Agreed. It's also a good idea to do your own research. Agreed. Seek multiple sources of information. Agreed. Consult with a financial advisor. Additionally, it's important to keep in mind that investing involves risk. Dude, let's go. Hey, this is a message to my research analyst. You're fired. I'm hiring ChatGPT. All right. See you guys.